There are three main reversal patterns you should know if you are a trader: the double bottom, the triple bottom, and your heads and shoulders. Welcome to my YouTube channel, traders. My name is Nando Koza, and in this video I'll be teaching you guys how to spot reversal patterns and utilize them to get the best entries in the markets. Let's get into it. Okay, so we all know that the market moves in either of the two directions, either in an uptrend or a downtrend. It's always the two. Yes, the market will, for example, fluctuate and correct itself along the way, but then the overall movement is always one of the two. So let's say we have ourselves an uptrend, right? The market will buy, and then we'll have phases where it corrects itself, right? So when we get to these correctional phases before this breakout, it's very, very crucial for you to be able to spot reversal patterns, because what happens is with a lot of traders, especially like beginner traders, they fall for these like short sells and think that it's the market changing direction and going for a sell, only to find out that the market is gonna break structure and continue buying. So in this phase right here, it's important for you to be able to spot the reversal pattern so that you know whether the market is in fact going for a sell or if it's just correcting itself and preparing to continue buying, right? So let's hop onto the first reversal pattern that we have. So right here, as you guys can see, we have ourselves the double bottom. But before we get there, if we were to analyze this chart, right, this is where we would have started. We would have started on the 4-hour time frame so that we can first identify our trend, right? So we just come here and use, I'm sorry, I got someone was knocking on my door. These are one of the disadvantages of working home. But as I was saying, we make use of this tool right here to kind of identify the trend, right? Where did you go? Okay, we make use of this tool right here to identify our trend. And as we can see, the market is forming lower highs and lower lows as such, right? So we can see right here that the market is forming these lower highs and these lower lows. And what I mean by that is that this high is lower than the previous one, and then the next one is lower than the previous one, and then the next one is slightly lower than the previous one, and then the next one is also lower than the previous one, and so on. So same for these lows, right? So what does that tell us? As messy and confusing as this movement is and not clean as it is, we can still conclude that we have ourselves a downtrend. And look at what happens when we get to this area right here where we have our double bottom. We have price form this support. And what is support? Support is our area of interest where price keeps bouncing off and going into either a long buy position or just like a temporary retest into the upside, right? Either of the two, doesn't matter, but like that means that this is our area of support, right? So now what happens when we have price bounce off this support area right here twice? We now have what's called a double bottom, basically meaning that price retested or bounced off the same, if not the same, then more or less the same psychological area as you guys see right here, right? This is our double bottom. So let's say we were trading live, right? To make it realistic, after we have ourselves this double bottom and we identify the double bottom, we now that double bottom now serves as our first confirmation that we're going to go for a long position, basically for the market is going to go for an uptrend, right? But then we can't just like now just assume that okay, now we're going for an uptrend and just take the trade. We have to get ourselves a second confirmation. What does that second confirmation look like? So basically we would have to have price break above this structure. This is what we call our resistance, because this is where price resists going to the upside. Every time it gets to this area right here, price just falls back down, right? So this is why we call this area our resistance. So we have to wait for price to break this resistance and retest, and then give us the third confirmation being the bullish candle and buy. So basically price bouncing off of here twice is our first confirmation. Our third confirmation would be price breaking above this area, right? That would be our second confirmation. And then our third confirmation would be price retesting and then giving us a strong bullish candle. So let's say that's what we would be waiting for. We basically set up our long position, right? We set it up like this. Remember that your reward has to be 2 times what you risk. So basically what you make when you hit your take profit should at least be 2 times what you would lose if you were to lose money. That's called proper risk management. You always have to earn 2 times what you would lose if you would lose money. You understand? You can go up to 3 times or 4 times. It's all up to you and up to the setup and the conditions of the market that day and time, right? So we now know that we're waiting for the market to do something like this. Continue buying up here and then come down here, retest, give us a bullish candle and buy. So this is basically what we'd be waiting for, right? This is technically what we would be waiting for. And then this stop loss would basically be below our newly formed support after price breaks above. So it's really important that your stop loss is always below this, below the the newly formed support. This is because if price breaks above and then fails to like bounce off of this support and instead like breaks below the support and sells, that means that there's a good chance that price is going for a sell. So we don't want to be in that trade. As soon as it does that, we want to know that we'll be kicked out of the trade and only lose the amount of money that we're willing to lose, instead of like being trapped in a trade we don't want to be trapped in, and then now it's a whole mess. You lose a whole unnecessary amount of money. So yeah, let's say this was our setup. So we basically wait for price to break above, come and retest this newly formed support, and then give us that strong bullish candle. As soon as we get that bullish candle, we buy. So let's see how we would have played this one out. We'd still be waiting for price to like bounce off. As you guys can see, it has not given us that proper bounce off. Let me just make this more accurate. Yeah. So we'd still be waiting for price, Boom. Boom. So you see this area right here, this is where we would have entered our trade. Why? Because price broke above, retested, and then gave us this strong bullish candle. So at this point, we would have entered our trade. So let's see how this would have played out after we entered our trade, right? We'd still be in the trade. Let's just extend this right here. We'd still be in the trade, and then boom, just like that, our take profit would have been hit. Just by following a simple strategy, waiting for the double bottom and having it serve as our first confirmation that we're going to go into a buy, waiting for the second confirmation, which is price breaking above this resistance and forming a new support, and then waiting for the third confirmation being price forming a strong bullish candle, being this one right here, this one right here, and this was our retest, and then this being our strong bullish candle being our third confirmation, right? So it's that simple, guys. And then right now we're gonna move on to the triple bottom. It's still the same logic, guys. Trust me when I say it's still the same logic. We see that we had our downtrend, right? We had our downtrend. Price came as such. Came around here. Board came around here. Formed these lower highs. I like how messy this is because it also just, okay, let me just do this. It goes to show how imperfect the patterns will look in real time, right? As long as you understand how to spot a downtrend or an uptrend. So right here, we have ourselves these lower highs, right? We have these lower highs. This high is lower than this one. This high is lower than this one. This high is lower than this one. You get what I'm saying? Same as we had in the first pattern that we analyzed, right? So now we know that we have ourselves a downtrend. What's the next thing to identify? We'd have to pay attention to the fact that the market bounced off of this area of interest 3 times. Price bounced off this support basically 3 times around almost exactly the same psychological area, right? We can see price bounced off the same exact line, right? 3 times. What does that tell us? That tells us that now we have a triple bottom. So we have a first confirmation that price is going to change direction from going from this downtrend into what? Into this uptrend, right? So that's our first confirmation. So let's say now we're trading live and we just confirm that this is a triple bottom. Let's say price was around here. So since we have this first confirmation that price is gonna go for an uptrend, we would have to wait for the second confirmation. What is the second confirmation? The second confirmation would be the price. The second confirmation would be the price breaking above the structure right here, retesting, and then the third confirmation would be price giving us a strong bullish candle, and then continuing to the upside, right? So we'd basically be waiting for that move, and then we'd know, okay, we can go ahead and just like apply our long setup. This is not compulsory, but it just helps you with patience, I'd say, and then also makes it easier for you to anticipate exactly where you want to place your stop loss and your take profit. So we basically wait for this move to play itself out. So let's see. And boom, you see? Right here, we had ourselves this break above this area, and then this small retest, and then we had this strong bullish candle, right? So before we even had this strong bullish candle, we could have easily gone down to the 1 hour time frame, right? Because every time we execute our trades, if we analyze, if we interpret the market's direction on the 4 hour, that means we're gonna execute the trade in the 1 hour, right? So here we would have seen that, you see on the 1 hour, it's even more in more detail. You can actually see where this resistance is supposed to be. Let's just wait for that to load. Sorry for that, guys. I was just having slow internet connection. So basically, see, when you go to the 1 hour time frame, it's easier for you to determine where the resistance is, right? I'm just struggling to. Okay, so basically we see that price broke above our resistance, because on the 1 hour time frame, this is where our resistance would be, right here. So we see that price broke above this resistance and then gave us a strong bullish candle. So this is basically where we would have entered our trade and then placed our stop loss below the newly formed support, being this one, right? So let's just do this. This is where our stop loss would go. So this is the 1 hour time frame. So we'd be using this 1 hour time frame to execute our trade, right? And then just make sure that at least our trade is at least our take profit is at least a 2-to-1 ratio, which we do have right here. Let's say at this point. At this point, we could see that we have a strong bullish candle, right? So we would have entered our trade because we would have now had price bounce off of this new support. So let's see how that would have played out. So if you went for a 2-to-1 ratio, price would have already smacked your take profit. If you went for a 2-to-1 ratio, then your take profit would have been around here, right? So this is why it's good, or it's always good having your TP1 and your TP2, or more if you want, but like I think 2 is enough. So yeah, your take profit would have been smashed round about here, right? And then if you waited like longer, then your TP3 would have, which would have been around here, would have also been smacked at this area. So in that way, you would have made yourself some good money just by following a simple strategy, waiting for the first confirmation, which is this triple bottom, and then waiting for the triple bottom to break the structure here, for price to break the structure here, retest it, and then give you this strong bullish candle as your final confirmation. So that's how you would have went about it, guys. Let's go and move on to our last reversal pattern. And remember, guys, if you're using the 1 hour time frame to interpret or determine the trend of the market, then that means you would use the 15-minute time frame to execute your trades. But then if you're using the 4 hour like I did right here to determine the trend, then that means you would use your 1 hour to execute your trades, right? So 4 hour for determining the trend, 1 hour for executing the trades. 1 hour for determining the trend means that 15-minute time frame for executing the trades. Good, let's go. Okay, as you can see right here, so after this triple bottom, we obviously had ourselves an uptrend, right? So let's just fix it up. We now had ourselves an uptrend, 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 until we got to this area right here where we had price form our heads and shoulders. And yes, it does not look as perfect as the one that you saw in the beginning of the video, but that's how the markets are. That's why it's so important that you are able to spot these when you see them. Right? I just want to like put it all out so that you guys can, so I don't have to keep going back and forth, you know. So yep. Okay, so why do we call this our head and shoulder? Okay, actually let's just start off from here. Actually here we can see that we have an uptrend. Why? Because price kept on forming higher lows, kept on forming these higher lows, right? And then on the top side, price was forming these higher highs, right? So that simply tells us, as messy as it is, once again, as confusing as it might look, but like this just tells us that price is going for an uptrend. So cool. Let's come here. When we got to this area right here, we had price form this head and shoulders. So this is the left shoulder, and this is the right shoulder, and this is the head, right? So these two shoulders will always bounce off more or less around the same exact place, right? You see, like both these shoulders are at the same psychological area, and then the head is just like slightly higher, right? That's how simple it is to spot it. So let's say now we're trading in real time, and to make it just like more realistic. So let's say price was around here. So now we're trading in real time. So we'd basically know that there is a good chance that price changes direction and goes for a bearish trend, because we had this head and shoulders form, right? So that's our first confirmation or indicator rather that price has a good chance of going bearish, going for a sell, right? And then now we know that we'd have to wait for the second confirmation, being what? Price breaking this support and forming this retest pattern and going for a sell. So we basically have to wait for price to break this support and then come up to retest and then sell, right? So that's what we'd wait for. So knowing that, we'd go ahead and set up our short position. We'd go and set it up. We're not entering the trade, we're just setting it up, right? And waiting for price to break below and then retest and then give us a strong bearish candle, and then we know, okay, that's our cue to enter the trade. So let's go and see how we would have done that in real time. So boom, you see now exactly. Right here, we had price break below this structure right here and form a new resistance, turning this area of interest from being a support to a resistance, because now price broke below it and is now retesting it, right? So this right here would have been tempting for us to enter the trade, but remember, we have to wait for price to touch this area of interest, right? So around about here is where we'd enter our trade. So this is where we would have entered our trade, right? Because we would have waited for that retest and then had price give us a strong bearish movement. So let's say around about this candle right here, this is where we would have entered our trade, right? And then remember, we always place our stop loss above. If it's in a selling trend, if it's in a bearish trend, we will always put the stop loss above the previous high, right? Above the previous high. And then also that will automatically put it above the resistance, right? And then now we just entered our trade here. Let's see how that would have played out. And when being in trades like this, guys, patience is really important. Really important. Let's make it a 2-1. Yeah. See, almost got knocked out here, almost, but then we followed our strategy. We held. This is why it's important to trust in your analysis, right? Because you see, a lot of traders would have like bailed out of the trade right here, only for the market to continue selling as it is right now. Let's just let it run. We're staying patient. We're staying patient. We're still in the trade. We're in it for the win, and we're being disciplined. Boom. Just like that, our take profit would have gotten hit. Just like that, our take profit would have gotten hit. And that's how we trade the heads and shoulders and how we execute it. Right? So, if you guys would actually, now that I think of it, if you guys would actually like me to make a video explaining how the double top works, how the triple top works, and how the reversed heads and shoulders work, comment down below and let me know, because guys, it's still very much the same thing. So same way that let me just do this. Same way that the double bottom works, where we have to wait for the double bottom to form and then wait for price to break the structure and continue buying for us to enter the trade. It's the same thing that happens with a double top, right? So with a double bottom, we have to wait for these two double touches at the bottom and then wait for price to break the structure, retest, and then give us that strong bullish candle, and then we enter the trade. That's what we do, right? When it's a double bottom. It's the same thing if it's a double top, guys. Same logic. Nothing changes. Nothing changes. And let me show you what I mean by that. So if we now have ourselves a double top, we have ourselves something like this, right? Let's see. Breaks below, breaks the structure, continues buying. This is a double top, right? And then this would be our structure. This is where our structure would be, right? This is where our support would be. So we literally do the same thing. We'd go about executing this trade exactly the same way. We'd wait for this double top to form, and then that would be our first confirmation. And then our second confirmation would be the price breaking below the structure, right? And then this turning from being our support to being our resistance, right? So we'd wait for price to break below, retest, and then give us that strong bearish candle, and then that's when we know that we enter our trade. Same way, exactly the same thing for the triple top, exactly the same thing for the heads and shoulders. We apply the same logic, guys, the same technique, the same strategy, right? But then I don't mind making another video explaining the same thing, right? These reversal patterns, but then having them inversed, like I'm saying, the double top, the triple top, and then the heads and shoulders reversed. I don't mind making a video like that and then explaining them in detail in the actual live market, as I did today with the double bottoms. And the others, right? Sorry. And one thing that I need you guys to remember, if you make if you determine your trend using the 4-hour time frame, then you execute your trades on the 1-hour time frame. If you determine the trend using the 1-hour time frame, then you execute your trades using the 15-minute time frame. That's really important. That's something that's really important for you guys to understand. And yeah, guys, please don't forget to comment below if you have any suggestions of what I should break down for you in the next video, whether it being support and resistance, just mainly support and resistance, or how to use trend lines, or how to naked trade. Whatever it is, guys, let me know. Risk management too. I actually think I did a video on risk management and support and resistance. If I haven't done one on risk management, I can also do that. You guys just have to let me know in the comment section below. We've now reached the end of the video, guys. Thank you for sticking with me till the end. If you are interested in trading with one of my best recommended brokers, make sure you click the link down in the description. And if you're interested in being part of my free WhatsApp signal group, make sure you also hit the link in the description below. Till next time.